Welcome everyone to the Leaders in Housing Counseling call for December 3rd. Can you believe it's December already? Amazing. Well, it's been a hectic year and we're about to have our national meeting next week, so lots to talk about and some thinking to do, and we need some direct input from you. So I hope you're close to your phone and your computer, and you can give us some feedback, and we'll have one quick poll we're going to take on a pressing matter. So let's do a quick review of the agenda and dive right in. So federal funding update. Matthew's been traveling and we've had some interesting meetings we need to give people up to date on. We're going to spend a lot of time talking about the leaders meeting coming up next week and preparing for it and queuing up the right questions and thoughts. So we're also going to ask you a direct question, which is about the timing of the NOFA, getting some feedback about people being concerned that the NOFA might drop in the middle of the holidays, and so we need to get your feedback on it. But we'll talk about a bunch of things on the leaders meeting coming up, and try to get your feedback on it. Also some broader areas of interest about what's emerging in our industry and our marketplace. Matthew's going to give us a report on the mortgage servicing survey, which you all have worked hard on to get done, and he's pulled together some pretty interesting results, which I think you will be may confirm some of the things you've always thought, and but also add some insight. And then we'll do a quick plug on joining NHRC and when the next call is going to be, which will be in 2 weeks. So let's move right on into the agenda. So Matthew, federal funding update, and tell us about your trip to South Florida.
Oh, sorry, we lost this slide. Yeah, so I think on the last call was actually the day that the THUD bill was supposed to come up on the Senate floor, and ended up getting pulled at the last minute again, which seems to be an annual thing. But just as a reminder, I don't think there's anyone on the call who doesn't know this, but the goal going forward now is to try to get NFMC funded as close as possible to the House's number, which is $42 million, versus the Senate number, which is 0. So as Bruce mentioned a couple weeks ago, last week, I guess, the Tuesday before Thanksgiving, along with NCLR, I went down to Miami, and we, along with some of the local NCLR affiliates, met with the legislative director for Chairman Diaz-Ballard, who's the chairman of the THUD appropriation subcommittee in the House. So he's pretty much the top person that we are interested in, and who really, if we're going to have any success, it's going to be because he decides that it's a program that he cares about. So we went down. There were some clients who came for the meeting. They talked about having gone in and, you know, the runaround that they had trying to work with the servicer on a modification prior to going to the local counseling agency, and just what a difference it had made being able to go in and work with a counselor, and, you know, just having much better results in terms of trying to get a modification. And then the local agencies also just talked about what they're seeing on the ground, talked about the continuing need for foreclosure counseling. They talked about what it would mean for their agencies if if NFMC funding were to go away, and like many times when we've had that question in these meetings, the answer is we would probably have to lose staff, or you know, have a full-time staff go to part-time, and so those are the kinds of things that really make a difference when you start, you know, talking to a legislator about, you know, we're going to lose staff who are providing services to your constituents. That tends to get their attention. So I think it was a really positive meeting. With these meetings, you don't often get much by way of feedback from them. They're often pretty tight-lipped. He did say that you know, the negotiation is ongoing. They're working with their colleagues in the Senate on, you know, our programs, but hundreds of others, trying to, you know, reach agreements. He said that, you know, the negotiation is ongoing, but that the programs that we're interested in are among their priorities. He also said that he didn't think the final number would be 0, so that's encouraging, although there's obviously a big gulf between 0 and 42 million. So there's still work to be done, and we're going to continue lobbying them and making sure that it's an issue that stays on their radar. The timeline for this is very short now. December 11th is when the continuing resolution they had passed will expire. So the idea is to have an omnibus, so all of the appropriations, not just the THUD appropriation, done by the 11th. So it's very much a influx kind of thing, and something that we do need to keep the pressure on. I'll just quickly mention the other thing that we did talk about at the meeting as a priority is the HAWK program. As folks remember, in last year's budget, actually the night before or the morning of our national meeting last year, we found out that they had included language in the appropriation that basically prevented HUD from using any money to do a HAWK pilot. And as happens, the language was just carried over into this year's budget bills. It's the kind of thing that happens just because it was there. It just ends up being included the next time around. So in the Senate, Senator Menendez was prepared when it looked like the bill was going to go to the Senate floor, was prepared to offer an amendment taking out that language prohibiting HUD from doing a HAWK pilot. And so we asked Diaz-Balart to also support lifting it on the House side. It actually wasn't an issue he was familiar with, so we followed up with some background and some information on why HAWK is a good idea. And we'll keep pressing them on that as well. So I think I've gone on long enough. Bruce, is there anything you want to add?
I think that was excellent. We were very encouraged that there's some interest in trying to get HAWK back on the radar again. So, and Menendez, of course, is a Democrat in the Senate, but also lots of seniority, lots of skill. So that's an encouraging sign in an environment where things haven't been as encouraging. So very good. The one thing to keep in mind is if you know any cardinals in the House or Senate, so people with lots of seniority, this is the moment where if they could say a few words to the chairman, Mario Diaz-Balart, about NFMC funding, this is the moment now. This decision is all happening right in the next couple of days. So, move those pieces if you've got them. Thanks so much. Okay, let's move on. So we have our meeting coming up next week. I'm very excited. On Thursday, we will do and the way it's playing out, we're going to have a morning meeting where we'll have Aaron Dorfman from the Center for Responsive Philanthropy. He's kind of one of the morning meeting, of course, will be the NHRC meeting of the members of the organizations that have joined at NHRC. But we'll have Aaron Dorfman. He's kind of one of the leading advocates for improving accountability with foundations. We have a partnership now with the center, which expands the number of membership benefits that we have available. He'll be announcing a new one, I think, and of course, you have access to the guide to foundations, completely free access to that through our program as membership, along with other benefits. There are a bunch of HR and other kinds of partnerships that they've got. So that'll be interesting. I think we'll also talk to them a little bit about trying to open up the foundation world a little bit. And then the main bulk of the meeting is really going to be a sit-down and conversation with Sarah Jarik. And our goal here is really to have a very candid exchange. We all know she's deeply insightful about our work and our community, and the range and depth of our programs, and strengths and weaknesses. But we can also bring up specific issues we've got with HUD, and we'll have a little conversation about that later on this call. We'll have lunch for the membership, and then the larger meeting for everybody else, including everybody else, starts at 1. and we'll have we're going to do a little bit of work on these slogans, and we may even have a marketing specialist join us for part of the meeting to help us think through about slogans. And we're not going to decide on the perfect slogan. We're just going to get a lot of input and ideas to try to make a better list, and then and obviously anything we come up with, everybody's free to use as an opportunity to promote their programs and their work. But it's a kind of the first step in a broader conversation we're going to do about trying to figure out how better to brand housing counseling. We'll have a briefing from HUD with their updates. So we'll have Sarah, Brian Siebenmust, and Ruth Roman. We'll have a good space there to talk about the mechanics of our work and any opportunities and questions that get raised either before in our conversations now or questions from their presentation. So those are all opportunities we should be keeping in the back of our mind. And then we're going to have a kind of a blockbuster panel on really thinking about the opportunities and partnerships outside of the federal plane for housing counseling agencies. So we'll have people from the Federal Home Loan Banks, from state housing finance agencies. We're also having an innovative program that Gabe Del Rio, who's now at Springboard, will talk about a couple of ideas he's got about innovations counseling groups can look at, and a program they're doing as a mortgage platform. We will have a candid conversation among ourselves about the principles on how to do fee-for-service with lenders and maybe establishing a ground floor. It's going to be led by, we talked about this in the last call, going to be led by Lot Diaz at NCLR. They've done a lot of thinking about this, and Eric Salazar talked a little bit about this 2 weeks ago. So we want to make this more concrete and more available to people. And so we'll hopefully end up with some tools for that at the end of that conversation. And then we'll have a policy conversation really about how to structure all the discussions around what replaces HAMP and financial reform, and how do we insert housing counseling into that in a deep way that really builds us into the system. And we've got two of the kind of leading thinkers on this kind of work from outside of our business. So we'll have Barry Zegas. Many of you know him from many years heading up the Low Income Housing Coalition, and then at Fannie Mae, he's the housing person at Consumer Federation of America, and a longtime friend and a longtime deeply thoughtful person about how to make the markets work, and deeply important for us to, and he's done something about how this all might fit together, and very helpful to have him on our side in these conversations. Joe Weisbord, many of you may know from the many years that he's at Fannie Mae now, and has been a helpful voice internally to Fannie and FHFA with our kind of work and this idea of integrating housing counseling more effectively. We're so bringing him into the conversation, and hopefully he has the possibility to be a champion inside many of these conversations around our work. Deeply sympathetic to housing counseling, has participated in many forums, and will I think that we have a couple other people in the that we're talking with about whether they can make it or not. So that'll be that they'll round out the group, and that'll be a full day. And at that point, you really will have deserved a good sit down, have a good drink, and hang out. Actually, there's no sit down. This is going to be it's going to be a reception starting at 6 at Del Campo, which turns out to be a very highly ranked restaurant, kind of a Peruvian lilt to it. South American. We'll have free drinks, free beer and wine, and dinner. And the whole idea would be that be pretty informal, so that you get a chance to circulate and talk to people. We'll have some of the guests at the meeting there in the evening, but mostly it'll be ourselves. The dinner is sponsored by Auquin, and they'll have their senior folks there, and you know, Ocwen has been actually a pretty big ally for our work in the public sphere and for principal reduction. So, and if anybody wants to talk about principal reduction, they are very interested in talking about this. So but that'll be part of it. But really, it's meant to be mostly a way for us to spend more time networking and talking. So full day, the day before, a handful of us are meeting with Michael Stegman. He's the senior housing policy person at the National Economic, at NEC, the National Economic Council, and the White House advisor on housing. And we're talking with him about the plans for 2016. So we'll be able to at least give highlights from that at the meeting, and we'll certainly talk about it on the next leaders call. So we're over 80 people have registered for the conference, so it's going to be a full house. We do have room for a couple more if you want to squeeze in, but it really helps to know this now because we're ordering lunch and dinners and all that sort of stuff. So please use the links and get registered if you haven't already. We're really have got a good crowd. Okay, so looking forward to seeing many of you, and some of you I've known for years, and some of you I've never met face-to-face, and it will be great to see and hear from you. So on that note, let's move on. Okay, so first I want to queue up a big issue, and I'm going to just say that Katie Taylor has raised this with me, and maybe with others as well, but the issue is the timing of the NOFA, and her big concern was that the NOFA might come in December in the holidays when they're not at their regular staffing levels because people are taking vacation. And it does look like a lot of people are taking off a serious chunk of the second half of December. So as you saw, when Katie reminded me of this issue again when we were soliciting thoughts about HUD, I did post a quick note, and Rebecca Sen from the New York Mortgage Coalition chimed in saying something to the effect of, OMG, my entire staff is really concerned about this. And I think the message would be very helpful to not have the NOFA in position until, I assume, until the first of the year. But so we thought we would let people weigh in on this, and so Matthew, I was going to encourage people to maybe see if they have if anybody else wants to have any inputs before we do the poll. Could we hold on the poll for a few minutes? And no, if it's too late, then it's too late. It looks like we're baffled by technology. So it may be that people, I think it's a complex issue, and I think that we do get lots of concerns about the delays in getting housing counseling funding from HUD. And so we are, what I wanted to do is get a sense of the group. And I think, I'll be completely frank here. I think, I mean, obviously I don't have a stake in this one way or the other, but if we're split 50-50, I think we don't make any recommendations. But if, overwhelming majority is favor of one position or another, we certainly would want to communicate that to HUD. So, and there may be people who feel one way or the other, but I thought, one, to get this out in the open as a form of some input that we could provide to HUD.
So people are somewhat slowly voting, and maybe take their time, vote. But we do have a couple people who weighed in, both essentially the same, but one saying we'd like the NOFA as soon as possible. I think with the concern about delays in funding, they said maybe HUD can bump the due date out to accommodate those that want it, that need more time, want to do after the holidays. Someone else weighed in saying they'd be very concerned about funding delays as well.
Okay.
People are continuing to vote.
Good. Well, that's the kind of discussion I was hoping to have. So let's see where people land on this, and we'll take it under advisement. So do we think people have peaked, or are we still trickling votes in? People are thinking about it. You're struggling. Okay.
No, it seems now to have settled down, but
okay. All right. So okay,
it went from an initial even more overwhelming yes to a slightly less overwhelming yes.
Okay. Well, so this is actually a very strong yes vote here, and I do want to be respectful of minority opinion. So I'm just trying to think of what the best way to manage this is. We could just give HUD the results of the poll and say that we had people concerned on each side, concerned about the delays and concerned about the holiday disruption. So I think unless so maybe let's do this. So that's where I'm inclined to land, but people could weigh in by just putting in their thoughts into the box. And Matthew, if you could take the trusted role again of transmitting what people say, that would be good. Okay, so always happy to jump into one more controversy. That's what we do, right? So I thought, so one of the things was, well, we're going to have some fair amount of time with HUD. Are there some issues that we should be raising with HUD? And we've gotten kind of a range of responses here, and I'm assuming we may get some more responses into the answer box as well. Well, let me just give you an example or two. So this is from Patricia Kidd at the Fair Housing Resource Center. Let's see. On the most immediate issues with HUD, timeliness of responses to questions, certifications, payment, and clear understanding of what's needed for reporting on housing counseling. And then 2, the grant process. They overlapped fiscal years and then amended the agreements to provide 18 months of funding, but kept it at the 12-month financial levels. Grants are generally over and there's no application out yet. Basically, housing counseling agencies have to offer the services for up to 9 months before we are informed if we have a grant or suspend services. And so the the complicated issue here is that originally when we were doing HUD applications back in the day, they were actually all a year delayed. So the budget would have been passed, and it was last year's budget that we start on October 1, so the money was in place. When we lost that year of funding and a new requirement came in that they needed to turn the money around, they're completely dependent on Congress passing the budget. So at this point, there is no budget that's been passed by Congress. That's what part of Matthew's report was, and that's not HUD's fault. I mean, they can't help that. And the whole idea behind the 18-month spread was to give some agencies more flexibility. But in fact, they'd like to go back to the 12-month framework if they can, but that really depends on getting a timely budget passed. So I just want us to be completely candid and fair with HUD on these issues. But definitely we completely understand, and actually many of you have raised this whole issue about that the money's not in place when you provide the services. You then have to go back and document the services, and some agencies have a firm policy that if you don't have the money in place, that you don't deliver the services, and so they only start delivering those services under the HUD funding cycle when the money is in hand, and to them the 18 months, the extension, the automatic or the longer contract year provides a greater ability to do that, but it also is all of it's an accounting nightmare. And I wish I could say, oh, HUD can solve many of those problems. Really, that problem rests more squarely with HUD, with Congress. And I do want us to be kind of realistic when we do talk with them about it. But certainly turning the money around when it becomes available is valuable, and they've gotten a lot better at it than they used to be. But still, potentially, maybe some work can get done. Let's see. Then, well, here's an interesting set. So we had several people who reached out who had rural or suburban backgrounds. So here's one. We are experiencing challenges in the rural areas with the current model of delivering HUD housing counseling. It seems that funding does not address factors involved with offering services to clients that are sometimes 1 to 2 driving hours away. This is not just the capability to phone counsel, but also the issue of marketing to and informing rural clients that the services exist and are available to them. So this is from Pamelia Harris at Community Service Programs of West Alabama. She also goes on to say, it now seems that everyone is in the housing counseling business. Lenders and realtors that gladly and successfully partnered with counseling agencies in the past now cherry pick and save the plum clients for themselves, or only refer clients they believe will not be mortgage able. Many now seem to discount the value of partnering with the LHCA. Is HUD making an effort to encourage partnerships with LHCAs? So, so Matthew, do we have things piling into the box that we want to?
No, we don't. Okay. I mean, there's one that I could share that I kind of resonated with me. So this is from Judy Hunter at RCAC, and she works with. They have a network of agencies in the West, and she said what she hears the most from their agencies is that regulations are killing them. She said HUD's certainly not going to do away with regulations, but that said, how do we change the mindset on regulations? What does HUD actually need and why? What is it used for? How can we take that and use it for our collective benefit? And I think that's also, I mean, to some extent that, well, I guess there's a question of to what extent that is congressionally mandated and to what extent it's HUD mandated. But I think that's something that we certainly, can work on and, have as kind of a big picture item going forward on how do we, to the extent that we can work with HUD on it, how can we streamline the regulations and all the various compliance requirements to the extent that it's congressional. I mean, Republicans should love the idea of, getting rid of burdensome reporting, or not the reporting, but regulations generally. So, I mean, maybe that's an issue that we can take up going forward.
Linda Ingram came in with an interesting one as well. We're beginning to see reverse mortgage seniors being foreclosed because their taxes are not paid. I spoke with a reverse mortgage specialist who has a nonprofit catering to the senior population, who said that things are tightening up for seniors not paying taxes and insurance. I think that means that FHA, which on the HECM mortgages, is tightening up. While this is needed, certainly, the seniors have been trained, in quotation marks, in a sense, by the servicers that they will get generous repayment plans. So now that things are tightening up, there needs to be a time period of education and higher repayment plans. Rules for reserves for purchase are inconsistent and loose. Some homeowners are not financially prepared for the cost of home ownership. My foreclosure department sees them within the first 2 years when they have a big repair and they have no money saved for the repair.
So we've had a few people weigh in. Someone actually just was curious to know more about the rural issue that was raised. This was Laura Bucksbaum in Maine. They're also in the rural area. I mean, maybe you can elaborate on this, but I think the issue that was being flagged is that HUD, I'm not sure if it's with the HUD payments, but not accounting for the fact that not just that it's, you know, a client might be an hour or two away, and so that kind of adds, I mean, maybe telephone counseling helps with that, but they were saying, I think in particular, it's a unique challenge for rural agencies to market and to reach clients, to raise awareness about that their services even exist. Is that
so? Maybe another way to think about it is that we also have this, I know with National Capacity has raised this with Asian populations as well. So in populations that are more dispersed and have lower volumes but require greater attention, they don't score as well because their volumes are lower. And that's one of the things that the HUD scoring system favors. I think the other issue that we've kicked around a little bit that we probably could learn some on the rural side is similar to what the rental issues are, is that the handbook and the assumptions of programs are that we're really in a dense urban environment, and groups that are serving other kinds of environments. I just got a call from Long Island Housing Services right before this call, and they identified their population as essentially suburban, but struggling with these very similar issues and requirements that are much more geared towards home ownership than rental, which is what what major segment of their business is. All of these are about trying to help HUD more effectively match the need in different environments so that their agencies are able to provide the services they're supposed to be in, rather than have a generalized system that's geared really just towards one situation, even though it might be the largest. So I think the problem is that we really need to have people who are specialists in these areas help us figure out what those lists look like and what the issues are, and take a look at the handbook and make these specific. I think, as I think we said before, and I think many of us have experienced, there is an openness at HUD right now, which is really unique and exciting, and the challenge that it puts on us is to really give them the tools, information, in order to do the kinds of things that they'll help all of us be more effective at. So I'm not going to know what the issues are on rural. I'm not going to know what the issues are on rental that much. And I think what we would really like is if those people that are specializing in those areas really help us make up a list that we'd be more than happy to start raising with HUD or create a vehicle for you to raise them directly. So I hope that answers Laura's question. Laura Austin has her own view of things, and she should chime in with specifics if she's got more to throw in. Okay. So let's see, Kendall Reed wrote in that I would like to hear about the upcoming counselor testing, new purchase programs that are in the pipeline, and modification guidelines. FHA mortgage modifications are the most difficult to obtain, especially when the budget is tight and or when the homeowner makes too much money and they have low housing ratios. Have they tracked this information, and is there a possibility they can ease up on their guidelines, especially when there's sufficient income to cover payment and offer a homeowner a long-term solution?
We've had some other people weigh in. This is somewhat specific to the New York Mortgage Coalition's role as an intermediary, but these are familiar issues. So HUD requires too much work for too little money, too much reporting, and non-standardized forms for billing reimbursement. They have no assistance in how to create billing reimbursement forms and how to tell groups how to do it. Reporting deadlines are an issue. PARs are an issue. She asked why they can't do more than one cumulative report. Seriously, 6 reports for one grant and having to aggregate data for over 20 groups to meet all these deadlines is insane. This is why HUD is losing counseling groups faster than they're adding them. Someone else asked about HAMP and that it's going to be ending. Is it likely to be extended? If not, is there a plan for a transition? Just talking about the need to ensure that lenders are going to continue working with homeowners. Oh, and someone asked about what HUD can do to encourage state housing finance agencies to become intermediaries.
So let's see. Just to speak on the HAMP question, because that's one we're spending a lot of time on, there is a conversation that we helped start up or encouraged, I guess we'd say, last August with Treasury and many of the servicers and housing advocates to figure out what will replace HAMP after it goes away. Its end date right now is December 2016, and while I've tried to encourage them to consider extending it further, it really sounds like there's a lot of reluctance to extend it further. The GSEs are very firm that they will not extend their HAMP equivalent, and Treasury was not inclined to go just separately for their HAMP program because, of course, it's limited to loans written before a certain date, and the Treasury HAMP, the one that they could extend, would really only cover the private label security loans in that population. They were saying that that was really getting to be a smaller pool. We're still encouraging them to want to extend, and we think that there'd be value in doing it, but it doesn't sound like there's a huge chorus of many advocates arguing for this, and I'd be surprised if it happens. On the question of what replaces HAMP, we were very concerned that there was a lot of interest early on in streamlined modifications, which are modifications that look like Tier 2 HAMP. So the advantage is that they don't require a lot of, they don't require any real documentation. You can offer it to the customer, to the homeowner. The downside is that it's really not tied to people's incomes, and so often can be a serious mismatch. And we did a lot of pushing against this. I have to say, even some of my friends in the advocacy community were getting a little sympathetic to streamline modifications. But it looks like at the end of the day, in the most recent Hope Now meeting, there was a report by Treasury and the Financial Services Roundtable, and they really said that it looks like income-based modifications are the tools that servicers are generally really looking at, and they were not expecting big changes. I think for us, one of the big changes is independent of HAMP is the funding for NFMC and the dangers that happen because that funding is declining, and it's a program that people in Congress are saying was meant to be short-term and will come to an end. Even if we keep it alive this year, it's only got a year or two to go. So there needs to be a model and a program and a way of funding housing counseling going forward. And what we've argued is that if you have a system that really can deliver mortgages, loan modifications, where people are much more likely to qualify, much more likely not to redefault, much less likely to lose their house to foreclosure, why wouldn't you use that as the entry-level system for loss mitigation in general? And there's actually interest in a number of servicers around this kind of a model that would need to be funded. But one of the really big stumbling blocks, as some of you know, and we've talked about on these calls, we've been talking with Fannie, with Freddie, with FHFA, and with servicers, is the whole privacy issues, and can the servicer share information with counseling agencies about somebody who's in delinquency. And that kind of fundamental question falls in the lap of the CFPB. And so we're at a point now where we think we're going to be able to go jointly with Fannie Mae and maybe with FHFA to approach CFPB and ask them if they can help create a system where counseling agencies can get direct referrals from servicers. And if we can build that component in, there may be some appetite for a more holistic system for dealing with these solutions. So that's one of the big projects in 2016. So glad that's a nice way of setting it up. I know there were a lot more issues on that list, but wanted to jump in on that one. So are there more things people have commented on, or more comments on the delaying the NOFA?
Someone flagged an issue, kind of big picture, with HUD's expectations related to clients signing disclosures, doing action plans. They say they do a lot of telephone counseling that works, and they can offer information by email, but clients don't always return signed documents. And they also talked about other clients a lot of them are on subsistence incomes, and there's very little room to work with those clients to create budgets that will improve their conditions because they're so low income. Seeing clients who are in crisis and very low income, they said it doesn't lend themselves to having budget discussions with those clients, so that's a pretty, I guess, fundamental kind of concern with what HUD's requirements are.
And that issue came up in rental situations where people are not, and we've also heard about it among renters, for people coming in for health and safety issues, where budget's sort of irrelevant to their concerns. So those are two categories. One is the low income, and the other one is, that's very helpful. I think that's one we should figure out who would be good to bring that up with HUD next week.
Concerns with PARs, the PARs that are familiar, and we've had those conversations with HUD, but it's still obviously something that needs some work. Going back to the NOFA question, one person weighed in that he thought it was fairly one-sided vote, so he didn't think that he was kind of voting for just letting HUD know that there was a pretty overwhelming support for not doing it during the holidays. Someone else said that they had said no, but it's because they're an intermediary and they need more time to gather information from their subs. So they thought maybe an extended deadline would be the perfect compromise.
Do they say anything what an extended deadline sounds like?
No.
Okay. Well, I mean, okay. Well, we definitely very interested in your opinions about this delaying things. I think it's delaying the NOFA because it's an area of fundamental people. So if you've got very strong feelings, especially on the no side, let me know, because I think at this point we're sort of at a place where we should submit. I mean, there's a way to think about it, I guess, about it doesn't matter when they issue the NOFA as long as there's plenty of time in January to actually do the application, so it gives groups some time to submit. But I guess I am still hearing that people really didn't want to have their sub-grantees also dealing with these things over the holiday period. Okay, well, you know, please, we value your input, so keep shooting things towards us on this. I was going to, oh yeah, so one thing was Teresa Bardwell, many of you know, has been a frequent contributor to our work here. It said that on the certification and the information that had been posted on the HUD website, she mentioned that will the test be updated as items on the website, I believe that's what you meant, are outdated. Most of the information in the study guide for loan docs are the outdated GFE, TILA, and HUD-1. Will this outdated material still be in the test? The avoiding foreclosure section has extensive information on the MHA programs, which will be outdated in the next year. It seems silly to have counselors memorizing outdated material. So very good point, well taken there. We should make sure that comes up at the meetings. So a couple people raised the issue about housing counseling and education not being mandatory, and wanting to really encourage mandatory programs. And I think we're on a tricky line here too, and I do need to give you the feedback because I get to deal with these on the policy level a lot. And one of the red flags that comes up very quickly among policymakers and in Congress, but also some in the administration, is us arguing that everybody should be counseled. And while I think that's a good idea, there's a lot of resistance to that in the policymaking world. And it's always going to be a better strategy for us to have certain programs that require counseling or incentives to get people to go to counseling, rather than an insistence that everybody goes to counseling, even though everybody might benefit from it. And it's easy to get dismissed very quickly on the mandatory in the big sense. So we should think about how to shape our wording and our proposals so that are there ones that actually get heard well in the communities that we are presenting in. Do you have more you wanted to? Oh, okay. All right. So Matthew and I are our desks are across from each other, so I'm always trying to figure out if he's signaling me or just scratching his ear or whatever it is that is happening over there. So, and Song also posted about this idea about being mandatory on all government insured or issued mortgage programs, including Fannie or Freddie. But then she starts talking about what some minimum standards might be like for people that would be a way of targeting a little bit more. So important to think about on those lines. Okay, so one area that I hope we'll do some thinking about as well is what are some big picture blue sky issues that we want to raise around visibility and elevating the work of housing counseling in the field. But I know as we're moving out of time, so Matthew, why don't we move on the agenda? I think we've touched a little bit about this. We're very interested in what people have to say about elevating the image and reputation of housing counseling. We will do more of this in 2016, and this Google AdWords. So we have a committee that's formed around it, and they will have a chance to meet. We'll probably be 2016 before they actually get going, but we'll do work in that. We're going to on next week. We're going to have some input from some marketing people at the leaders meeting, and have a conversation about what a slogan might look like. And I think these are elements of a program. We're really pushing the White House to take a bigger leadership role, a more bully pulpit role. We're encouraging to, for example, include into the State of the Union address a mention about housing counseling and an example. That apparently is an uphill climb, we've been told, but we'll bring it up again in our meeting with Dr. Michael Stegman on this coming Wednesday. But we're going to try to do more of those kinds of things. So your input on these and what works is going to be very helpful. We're going to monitor the non-bank mortgage lenders. And then we do need some input on innovative state housing finance programs that people can learn from. And we'll have a conversation about that at the leaders meeting next week. And one thing I didn't mention to put on the list, but we're going to also circulate just a short survey that a Survey Monkey that people can fill out on examples of problems they've seen with clients on language access and people who are language or so have limited English proficiency. And this will be stuff that we'll use with the CFPB. This is in conjunction with Americans for Financial Reform, with Empire Justice Center, with a number of legal services offices, and the National Consumer Law Center, and the National Fair Housing Alliance. And we are continuing to push our work on improving language access, and one of the things that we needed were more examples in the field. So there'll be a SurveyMonkey will circulate and probably keep open for quite a while, so whenever something happens, you can just jump on and pop it in. Okay, so Matthew, let's move on the mortgage servicing survey.
All right, so hopefully folks remember this. It was in October that we had circulated the survey on how well the servicers are complying with the CFPB regs that came into effect in January of last year. And it was really a wonderful response. We had 200 people, and as folks have mentioned, it was really a long survey. So we were very impressed and appreciative that so many people took the time to work through that survey. And just wanted to run through what we had found through the survey. So we kind of broke it out into two kinds of findings. One is just, so we asked about 18 of the specific regulations, and we said how well are each of these 11 servicers complying with them. So first I'll just talk about how well they're doing with the specific regulations, and then we also broke it out into how well are the various servicers doing relative to each other, and just generally how is each servicer complying. So with the compliance with the regs generally, we split it into four groups. One where servicers are doing relatively well, one where there's really dramatic need for improvement, and one where they're somewhat in the middle, where there's room for improvement. They're doing okay, but there's definitely need for improvement. And then we just treated the language access questions separately. So with the regs where they're doing relatively well, so one thing to note here is that there definitely is still room for improvement with these. I mean, really with all of these, they should be getting pretty close to perfect on every question that we ask. Even with the question that they did the best on, the median was 4 out of 5. So that's good, but that's the absolute best that the servicers did. So, our report to CFPB will stress that even though we're saying they're doing relatively well on these, there still is need for improvement. The encouraging thing is that these were really kind of the most important questions that we asked about, because they're all related to prohibitions on foreclosure. So just to run through the three where they had done relatively well. One is not filing for foreclosure until the borrower is at least 120 days delinquent. One is not filing for foreclosure while the borrower is performing on a loss mitigation agreement. And one was not moving for a final judgment or for foreclosure sale if the borrower submitted a complete loss mitigation application. So that's kind of the dual tracking, that even if they filed for foreclosure, they can't move for the final judgment if the borrower has given them a complete loss mitigation application. It needs to have been received at least 37 days before a sale. So that's where they're doing relatively well. On the other end of the spectrum, the areas where we saw really dramatic need for improvement, so these they across the board scored really badly. One is on transfers. We also gave a space for folks to weigh in and give us more detail on what they were seeing. With the transferring issues, almost everybody that weighed in on that open-ended question basically said that anytime there's a transfer, you basically need to start over every time, that none of the documents are transferred. You might as well just be starting from scratch every time there's a transfer. That's obviously a huge concern, and something that I'm sure CFPB is going to be interested in, and something that we will certainly be working with them to see what we can do to come up with a fix for that. Lost documents, I think folks will not be surprised that it continues to be a major issue. One thing that when we looked at the comments people had given, the issue that is years old still, so you submit the documents, something goes stale, or they they lose the document, then other documents go stale until you have to continue resubmitting. That's an issue we've been hearing about for years and appears to still be a big issue. Some people said that Hope Loan Port helps, but even then there can still be issues. The other big one that we saw a really dramatic need for improvement is on the successors and interest question. And so that's where if a borrower dies, once the servicer is notified that the borrower has died, the servicer needs to promptly identify and try to work with and communicate with whether it be a surviving spouse, child, other heir, or somebody else who has an interest in the property. And that was actually the question that servicers across the board received the lowest rating on. And that's something that CFPB had done its own kind of, after they had done the servicing regs, they had specifically tried to address the successors and interest question. So that's an ongoing thing that we'll continue working with them on. With the language access questions, I won't run through the ones where that were kind of in the middle, but there is a chunk where we said there's room for improvement. They're doing okay, but they definitely need to improve. Language access, the results were kind of all over the place. They did relatively well when we asked on how well servicers do communicating in the borrower's preferred language. They did okay on the question about borrowers being able to communicate with the servicer in the borrower's preferred language, and they did poorly when we asked about whether servicers accept non-English documents. So the other thing I'll just touch on is how the servicers did relative, how each servicer did. So there were 11 servicers that we asked about. It was interesting that they pretty clearly broke out into 3 tiers. So at the top you had Bank of America, Chase, and Wells. And on every question, all 18 questions, those 3 had the highest rating for every question. So they were clearly did the best. It's also worth pointing out that just because they're at the top, this is how they performed relative to each other. So it's not necessarily saying that they're doing great. I thought I had, oh yeah, so even the highest rated servicer was Wells. Their average rating was 3.5 out of 5. So that's, I mean, just a little bit better than average. So we'll stress in the report that this is not to say that Wells, Bank of America, and Chase are doing an extraordinary job, but they're doing better than others. In the middle was very clearly Auckland, Citibank, NationStar, and Select Portfolio Services. And at the bottom, very clearly, were 4 servicers: Satiris, HSBC, Greentree, and Caliber. On every question we asked, those 4 rounded out the bottom 4. So I know we're out of time, and I don't see if there's questions, but maybe we'll just leave it there for now, and we can come back after we release our final report.
Good. Thank you very much. Really quickly, we're going to just encourage people to join NHRC, put us in your 2016 budget so that you definitely got us in place. We have a good, solid core of people. Interestingly enough, this year we have the majority of people coming to the conference are coming full day in our member organizations, and membership obviously is those are the people that are most committed to our work, and we really appreciate that, and we'll work on expanding the benefits this coming year. It turns out that this getting people the foundation directory turns out to be a very valuable thing for a number of groups, and I'm very glad that it's working out for as many as it is. We will there'll be an announcement at the meeting about a new membership benefit through the Center for Responsive Philanthropy, and we'll talk about that more in the upcoming year. All right, so our next call, we will have one call left in 2016 in 2 weeks, and use that to tie up the loose ends from the conference, as well as make some plans for 2016 going forward. So anyways, have a great week coming up, and look forward to seeing many of you in DC on Thursday, and a few of you on Wednesday. This should be a really good weekend for us. Thanks a lot. Bye.